So, you have decided to take an education loan from a public bank because you have collateral to pledge. Well done. But which public bank you are going to choose? To help you answer this question, today we are going to compare two of the most popular public banks for an education loan, that is State Bank of India and Bank of Baroda. Hello guys, my name is Aman and I am one of the founding member here at Kyambi. In this comparative analysis, we will help you make a sound choice based on your needs between State Bank of India and Bank of Baroda. Let's get started. Before we dive deep into comparing SBI and BOB, let me tell you a few things about both these banks so that you can easily understand their overall functioning. Both of these banks can provide you with an education loan of up to 1.5 crore. The collateral you pledge can be tangible like a property or intangible like a FD. Both these banks are preferred for secured loans. Apart from this, there are many similarities that leads to confusion when making a choice between these two. Let's move on to the differences to help you clear up any confusion. The first difference is the rate of interest. The rate of interest is the percentage charged by the bank on the loan amount, reflecting the cost of borrowing. It's crucial to consider this when choosing a bank for an education loan, because even small changes in the interest rate can significantly impact your overall borrowing cost. SBI offers an interest rate starting at 10.15% for female applicant and 10.65% for male applicant for abroad studies. On the other hand, BOB offers a more attractive interest rate starting at 9.9% for female applicant and 10.4% for male applicant. The second difference is the need for insurance. Insurance is required when taking an education loan to protect the borrower and their family for financial burden in case of unforeseen events like death or disability, to mitigate the lender's risk and often as a mandatory requirement by lenders for added security. For SBI, there is an optional insurance called Rin Raksha Insurance. Apart from the discussed benefit, you can get an additional interest rate concession of 0.5% if you decided to take the Rin Raksha insurance. Meanwhile, for Bank of Baroda, it is mandatory to take insurance with the education loan and the amount is adjusted in the loan amount if required. Let's talk about the third difference, which is the moratorium period. The moratorium period is the time when you don't have to make any principal or interest payments. It gives students financial breathing room, allowing them to focus on their studies without worrying about loan repayments. SBI offers a moratorium period that lasts until you finish your course plus an additional 6-month grace period. During this time, you are not obliged to make any payment towards your loan, which is known as a payment-free moratorium period. On the other hand, BOB provides a moratorium period that covers the course duration plus an extra 12 months, but you will need to pay simple interest during this period. Continuing to the fourth difference is the processing fee. Processing fee are the charges that bank takes for handling the loan application. SBI charges a processing fee of 10,000 rupees plus GST. This fee is non-refundable. On the other hand, Bank of Baroda also charges a processing fee of 10,000 plus GST. However, the advantage with Bank of Baroda is that if your university is listed in their premium university list, the processing fee becomes refundable. This is beneficial in many cases since BOB has approximately 400 universities listed as premier institutions. The fifth difference on our comparative list of SBI and BOB is margin money. Margin money is the portion of the loan amount that you need to arrange yourself. When considering margin money, you should be aware that BOB does not require any margin money, again if your university or college is listed in their premier list. However, if it is not listed, then you would need to arrange 10 to 15% of the loan amount as margin money. On the other hand, with SBI, you are required to pay 10% as margin money in every case. Now coming to the main question, which is better? Which bank should you choose? Let's answer it with a small situational analysis. Suppose you are enrolled at Arizona State University. This university is part of Bank of Baroda's premier university list. So you will be able to get a loan of about 1.5 crore with no processing fee and no margin money. In another example, if you are enrolled in a university that is not in Bank of Baroda's premier list, you might consider an SBI education loan. With SBI, you might get a lower interest rate and only need to pay 10% margin money. Ultimately, the final decision boils down to your personal requirements and which lender offers the best loan terms for your situation. Now, you may think how Gyandhan can help you. At Gyandhan, we are here to be your trusted partner on your journey to study abroad. We help students by comparing various loan options to find the best fit for their financial needs and educational goals. That means we will do all this comparison, keeping your specific requirement and suggest you the best lender. So far, we have assisted 25,000 students and have disbursed loans totaling 8,000 crores. Our team is dedicated to guiding you through the loan comparison process, managing the application details and securing the most advantageous terms for your situation. Not sure where to start? It's easier than you think. Just click the link in the description to check your loan eligibility with a few questions and let our team take care of the rest. We hope this comparison helps you in making an informed decision about your education loan. Remember, investing in your education is a big step towards your future. Choose wisely and all the best in your academic adventures. Thank you for joining me on this journey. If you have any questions or need further assistance, feel free to reach out or drop a comment below. Don't forget to like and subscribe for more informative content like this. See you in the next video.